Okay. Where are you on the bear market Fed earnest scale? Are you merely at bored of NFTs, sorry Jerome, or have you got as far as not even checking portfolio anymore? I'm guessing you haven't got quite as far as unsubscribing from your favorite crypto YouTube yet. Of course you haven't, because that's not a real stage. Let's move on, because yes, bear markets are boring AF. There is no doubt about it. No news is followed by bad news is followed by no news again. But beyond those depressing price charts, code tweets and mainstream media articles titled something like "Has the sun set on crypto?" there's more going on than the price charts would have you believe. Stuff is being built. Dev teams are brushing away the remains of last night's takeaways, sending the tequila girls home and preparing to do weird and complicated things with computers that we mortals cannot hope to understand. Now, yes, Mega Floki, Elon Doge, Enum may be on life support, but other less doggy projects are getting on with growing. South close CoinMarketCap, turn off those price alerts and pull up a chair as we look at some of the big developments of the last few weeks. Now obviously Ethereum's merge is the best example of what I'm talking about here, but we've talked about that enough already. But as it happens, in just the last couple of weeks a number of other projects have announced upgrades and improvements that should lay the foundations for future success. So first up is of course Cardano, whose Vassal hard fork went off without a hitch not long ago. Charles Hoskinson and others sought to downplay the significance of this upgrade, perhaps mindful of the emotional roller coaster that Cardano users experienced after last year's Lonzo hard fork kind of failed to live up to their high expectations. Now Vassal was mostly geared towards improving Cardano's scalability, and I have to say it seems to have worked. After it completed, I went and played around with both Meld and Sunday Swap, and the transaction times on both had dramatically improved. I had previously seen a swap on Sunday Swap take hours, and that was on a good day, whereas in the wake of Vassal, it took just a couple of minutes max. And it seems that smart contract transactions have improved as well. And that, my friends, is progress. We're not quite at light speed yet, of course, but Cardano has further scaling upgrades in the works, notably Hydra. Now Hydra will allow Cardano staking pools to process 1,000 transactions per second. Now, last time I looked, there were just shy of 3,200 staking pools on Cardano, so bear with me while I send those numbers to CoinBureau's numbers department to process. Yes, that is north of 3 million TPS. Not bad at all. Now Hydra is scheduled for sometime in 2023. And of course there's a lot else happening on Planet Cardano besides Charles getting into arguments with people, and you can check our recent update on our main channel to find out more. Do note though that I hold ADA in my portfolio. Okay, next up we have Algar, and which has also been working on its scalability. Its latest upgrade was the introduction of state proofs just a couple of weeks ago, which saw a jump in TPS from 1100 to 6000. Again, more upgrades are planned, so expect further progress on this front too. What's especially interesting to me about Algorand right now though, is its affiliation with the Massachusetts Institute of Technology, or MIT. Don't know why I put on an accent for that, where founder Silvio Macaulay is based. Now MIT is working closely with EU Federal Reserve to develop its central bank digital currency, something I can't say I'm exactly over the moon about, but which definitely hints at Alger and having some close friends in some seriously high places. And speaking of proximity to powerful people, MIT is also located close to Ustgishuar Circle, which is headquartered in nearby Boston. Funnily enough, Algorand was also only the second blockchain that USDC launched on. And intriguingly, the USC supply on Algorand currently stands at just shy of 18.5 trillion according to Algo Explorer. Now the total USD money supply is around the same figure. Circle is apparently looking to become a so-called synthetic CBDC, i.e. one operated by Circle but with its reserves held by the federal probably nothing. And say, did I mention that Algerian state proofs upgrade made its blockchain quantum resistant? And that accountancy firm PwC noted in a report that the Fed was looking to quantum-proof its digital dollar network this year? Again, probably nothing, and also for those of you watching the Football World Cup later this year, you could spot Albaron's logo about the place as it's one of the event's sponsors. And if they can chuck that sort of money around during a bear market, well, they must be doing all right, one would imagine. Then, more recently, Cosmos got a lot of people excited with the launch of its new updated white paper at its Cosmoverse conference in Medellin, Colombia. And if anyone knows why Colombia is the current go-to destination for crypto developer conferences, then do let me know in the comments. Hey, maybe it's just a really cool place anyway. There was a lot to unpack about Cosmos 2.0, but some standouts include enabling new chains in the Cosmos ecosystem to leverage the Cosmos Hub's set of validators for security liquid staking, whereby Atom holders can stake their coins but without locking them up for a defined period of time, and a gradual reduction in Atom issuance, something which has suppressed Atom's price for a long time. Now, do note that this only scratches the surface of all the stuff in the new Cosmos white paper, which is definitely worth a read if you have the time. Link will be in the description, and note too that I also hold Atom in my personal portfolio as well. More recently, we've also seen Chainlink partner with Swift, the massive financial messaging service which underpins much of the global banking system, and Elrond's announcement of a mainnet upgrade and successful maintenance of its Mayor DEX. And if you're wondering why eGold pumped recently, well, there's your answer now. Despite all these exciting developments, the crypto market remains pretty flat, and any pumps we've seen for the aforementioned coins and tokens are likely to be short-lived or, well, even non-existent. Because that, my friends, is part of what being in a bear market is all about. It's not supposed to be fun, but it does show us that price charts only tell a fraction of the story.